Welcome back. Ethereum's long-awaited merge is finally complete. We did it. The network houses an ecosystem with hundreds of billions of dollars in crypto, and the merge should reduce the platform's energy consumption by about 99%. But what's the big change? And one expert is likening to the event to switching out an engine from moving your car. Our very own David Hollerith is here to clarify what is different this time around. And David, great to see you here today. What can we make of all of this? It's finally here, but how are you breaking this down and interpreting the latest?
Well, Jared, back to your earlier point, this new upgrade for Ethereum doesn't make it faster, cheaper, but it does make it greener. Now, the merge upgrade is essentially this process in which Ethereum goes from, it changes how it processes transactions. So it moves away from crypto mining to a process known as staking, where investors receive the chance to validate transactions by pledging capital in return for interest. But this consensus agreement is obviously a critical part of a blockchain infrastructure. It's also very far down in the plumbing. So for the end user, essentially nothing should change in terms of transactions and how they use the network if all things go smoothly in the coming weeks and months. But that being said, the energy consumption reduction is going to be significant. It's going to be the size of a small country. It was projected by an Ethereum researcher prior to the merge. Ethereum was estimated to consume about 0.2% of worldwide electricity. So that's a big switch that we're seeing from crypto. And obviously, energy consumption is a huge detractor for some investors when they look at the asset class. Further out, the staking component adds sort of a crypto finance aspect that might make it more intriguing for traditional investors.
All right, and let me ask you, this is having some effect on the price, not as much as some people had feared, because there were some disaster scenarios which look like they have been avoided. But what is the overall sense here in terms of what this is going to do for the price of Ethereum, this new merged Ethereum versus the other crypto platforms that we have out there?
Right. So short term, I'll point to the Ethereum to Bitcoin ratio, which sort of shows risk taking and obviously how well it's doing compared to the largest coin. Now, since the merge, Ethereum to Bitcoin has plummeted dramatically, which signals, since the release of new inflation data on Tuesday, a lot of investors have sort of waited for the merge, and potentially they're moving back to Bitcoin, looking at it as a safer aspect now that this software upgrade has happened and everything is run smoothly. That being said, though, for Ethereum longer term, this is huge. It essentially means that the team can execute on long talked about and awaited plans, and they've been working on this, for many years, and just being finished with it gives them all of the developer team more time to focus on other aspects, such as improving scaling, efficiency, things like that. So in general, longer term, it is really significant, but macro remains in the driver's seat for cryptocurrencies.
All right, and we'll see if that macro can raise the crypto universe out of that dreaded crypto winter that it finds itself mired in. We hold out hope here at Yahoo Finance. Thank you for that, David Hollerith.